Eileen Keller studied social sciences at the University of Stuttgart and got her PhD in a joint PhD program of the Graduate School of Social Sciences at Humboldt University in Berlin in cooperation with the Centre Max Po at Sciences Po Paris, and was then postdoctoral researcher at the EUY in Florence, and is since September 2015 a researcher at the Deutsch-Französisches Institut, the DFI, and is working on economic relations, international relations in a combination, and so the best speaker for what's to come now, because in 2021 she published a book on financial crisis and the limits of bank reform, France and Germany's ways into and out of the Great Recession, and that is the topic she's going to introduce to talk to us now. So Eileen, the floor is yours. 20 minutes and a brief discussion. Thank you.
Good afternoon to all of you, and thank you very much for the invitation to the IBF, the ODDO BHF Bank, and all the other partners of this conference. It's an honor and a pleasure to be here. So with my presentation, we will move into the 21st century and focus on the impact of the global financial crisis, both on the French and the German banking system. And in my view, it's worthwhile looking back at what happened then, because the financial crisis has certainly had the function of a critical juncture for the development of the global financial system, even though it may not always be easy turning back to a moment of crisis. But it has had, and I think it still has, a lasting impact on our understanding of a variety of topics, be it tail risk, liquidity risks that come along with size, interconnectedness, and leverage. And at the same time, and that's what I will focus on, the financial crisis has also led to more circumscribed forms of crisis learning that are more specifically tied to the development of national financial sectors and the national banks' involvement in the global crisis. And in very simplified terms, the global financial crisis developed into a crisis of financial intermediation by large banking group in France, while in Germany, the predominant understanding was that of a financial markets crisis and market-based banking, financial innovation, and Anglo-Saxon finance more generally, as opposed to more classic bank intermediation. And as said, I am a political scientist, so the focus is very much on the political measures, the political responses that were implemented in both countries in response to the crisis and their impact on the development of both banking sectors since then. And when I talk about crisis perceptions or crisis learnings, this relates to broader discussions that take place in the public sphere, including politicians. It's not tantamount to the discussion one might have in highly technical groups behind closed doors between, for instance, regulators and the financial community. So in the following, I will sketch out very briefly the impact of the global financial crisis. I will show how the crisis responses differed, and then highlight some elements that can, in my view, explain why the crisis response were different, which is very much linked to the dynamics with respect to bank lending and financial sector modernization in the years prior to the crisis. So I'm not quite sure if my presentation is there already, but we can also do it without. So when we have a look at the the impact of the financial crisis in France, very early on, among the large French banking groups, it was primarily the Crédit Agricole, Société Générale, and BNP Paribas, which occurred considerable write-downs from summer 2007 onwards, but they were not immediately threatened threatening their solvency. And then after the crash of Lehman Brothers, there were two individual bank outs for the investment bank Natixis and the Franco-Belgian bank Dexia. And beside these individual bailouts, all the large French banking groups profited from recapitalization measures and eased refinancing conditions. So that was basically it. And when we turn now to Germany, I think it's fair to say that for many in the broader public, the depth of the exposure came as a shock. The estimated amount of losses and write-downs by the banks is about 60 billion euros. That's more than twice the amount incurred by the French bank. And with hindsight, the IKB Industrie Bank became the first bank worldwide that needed to be bailed out. Only 2 weeks later, it was Sachsen-LB, the regional bank from the region of Saxony, that has faced difficulties. And in total, it was 9 banks asking for public guarantees. There were 4 banks with equity participations. We had bad banks for 2 banks. And so if we compare overall, the German measures of stabilizing the banking sector were much lengthier and required intervention on multiple occasions. And by the way, while the French bank bailout, if one wants to use that term, had a positive effect on state budgets, the fees and premiums paid by the banks in return for state support were superior to the costs of individual bank bailouts. The German bank bailout left the taxpayer with a net loss about 59 billion euros, and as the ongoing selling of the parts that the German state owns in Commerzbank shows, this is not even over. So when we look at France, the surprising thing for me kind of was that even though the French banks weathered the financial crisis comparatively well, they found themselves in a veritable crisis of bank lending and bank intermediation following the first phase of the financial crisis. And in the face of the public support that all big French banking groups had received, any credit that was refused to a small entrepreneur, to a small businessman whose creditworthiness had worsened during the economic slowdown was judged to be unfair and unacceptable, though there was very much in France an anti-banks mood going on at the time, and there was this persistent fear of a credit crunch in the public debate. This was all the more the case as the banks had agreed on commitments to credit growth, targets in return for public support, targets that they were unable to realize in the context of an economic recession. And then the dominant focus, in a way, back then was very much on strengthening alternatives to classic bank intermediation and forms of non-bank intermediation. And just to illustrate, I got here a quotation from a report that was elaborated on behalf of the then French economic minister, François Baron, who concluded that all in all, there is a good reason to assume that there's a strong tendency in favor of partial disintermediation of corporate funding and a stronger role of financial markets in responding to the financial needs of medium-sized and intermediate enterprises, both in terms of equity and debt. Not to be prepared to respond to this development with a sufficient dynamism of the Parisian marketplace would be a mistake, which could have a negative impact on both economic growth and the attractiveness of the financial market. And in line with this reading, there was a plethora of working groups back at that time on financial disintermediation, on alternatives to bank lending, and more generally about the future of the funding of the economy. And alongside with this reading of what the crisis meant, there were several measures to support this development, including the ending of the French monopoly in banking, giving the Shura a more prominent but still limited role in lending to businesses that are not listed on stock exchanges. There were modifications to the savings plans, including also the life insurance schemes to make more investments possible in equity. There was a smaller business act, so there was a whole series of measures that were not revolutionary, but were supporting, testing new forms of non-bank intermediation, strengthening the role of stock markets, bringing institutional investors back to small and middle-sized lending or on stock exchanges. So if we turn to Germany, the situation was not quite the same. Even though the losses were more significant in terms of total volumes, the crisis was not perceived as a crisis of banking in general, but remained in the broader perception very much associated with individual business models. And the reasons behind each bank, why it failed, were somehow differences. There were, of course, activities on the US-American mortgage markets. There was the special situation of the German regional banks with the phasing out of the state's guarantee, which were judged incompatible under European competition law. There was the takeover of Dresden in the case of Commerzbank. So behind each failure, there was a different story. And so in a very simplified terms, one could say that in Germany, the crisis was above all understood as an imported one that remained associated with Anglo-Saxon finance and risky bank activities, mainly abroad. And then there was certainly also another element relating to the good performance of both the saving banks and the cooperative bank throughout the crisis that showed increasing lending volumes, and very quickly then one could observe this perception of the German three-pillar system with universal banking along these three pillars was seen as an advantage, as something that was superior to risk-prone Anglo-Saxon finance capitalism. So also just two quotes to illustrate how one could say traditional banking kind of re-emerged in new light after the crisis. So the first one stating that we consider bank credit as the most important external source of financing here, and I think this will be true for quite some time. There's nothing wrong with that as long as everyone is happy, and it's evident that it functions quite well. And another one, I think that was a politician who said, I get bashed when I say in panel discussions that my imagination is broader than to assume that businesses absolutely need to be financed by classic bank credit. Strengthening Frankfurt as a marketplace is not even on a hidden political agenda. So the focus in Germany following the crisis was very much on traditional banking, on original to hold, and Germany was also at the origin of what became a new SME compromise when transposing the Basel III framework for banking regulation at the European level. So the focus very much on supporting traditional lending in the light of the uncertainties that were triggered also by the regulatory changes coming about with Basel III. So then the interesting question is why the responses were so different. And I think an important message here from my point of view is that there was no credit crunch in France and that the bank lending conditions throughout the crisis were not that different. This is, by the way, also confirmed by two economists from the French Central Bank who did a report on the issue and stated that the French SMEs do not appear to have been strongly affected by credit rationing since 2008. This result goes against the common view back then that SMEs suffered from a strong credit restriction during the crisis, but is perfectly in line with the results of several surveys about the access to finance of SMEs recently conducted in France. So, when looking back, it is, in my point of view, not entirely clear what was happening at the peak of the crisis. But what one can see, I hope it's big enough, is when it comes to bank lending, there was a movement of very strict tightening in France following the peak of the crisis when it was more or less not clear how severely the banks would be affected by write-downs. But very soon there was no further restriction. So it was a very acute moment at the peak of the crisis. But what we also see is that the French businesses had a strong reaction following this tightening of lending standards. And there were also you could also read about delayed communication decisions, that some of the banks re-centralized lending decisions. And so what you can see here in terms of expectations of how the availability of credit would develop for the respective business owner, they were all extremely pessimistic. And you can also see, if you look at the black line for Germany, in Germany the situation was fairly optimistic given the context of the crisis. And this also showed a clear effect. So here you can see the net issues of equity, debt, and credit. And what you can see is that following the crisis, the level of net lending was significantly lower than prior to the crisis. At the same time, you have a considerable increase in the funding by debt securities, whereas if you have a look in the column for Germany, you have higher volumes of net lending following the crisis than in the years before. So the important thing, in my view, in the context of the crisis is that there was a change of the availability and the conditions of bank lending occurring in France during the crisis. And as one financial expert or expert on corporate finance from the French side emphasized, there's one thing that one should not forget. France is one of the few countries, and this still holds nowadays, where debt credit is abundantly available. The French culture is one of low margins, and liquidity is abundant. So what happened? The entrepreneurs all relied on highly leveraged models, which with little equity capital and a lot of credit. That's what made them extremely vulnerable, and that's about to change. What happened in 2008 was that the impact of Basel III accelerated the philosophical change of tendency in corporate financing. So there was a realization that things had changed relative to the past. And at the same time, if you look at the years prior to the crisis, there were no major adjustments occurring in the banking sector, with financial liberalization, as we already heard, taking mainly place during the 1980s. In 1988, there was also a mechanism for securitization introduced under French law, but at the same time, the French regulatory setup remained relatively restrictive, and it was not an activity the French banks had massively invested in, so there was no major reappraisal in this regard. Now, if we come to Germany, the crisis very much put, in my view, an end to the process of modernization of the financial sector, which were heightened in the years of the early 2000s. Well, we all know here in the room in 2008, it was the Initiative Finanzschutz Deutschland that was founded. The German Council of Economic Experts at that time advised the German government, to continue, I quote, to continue the course of liberalization and modernization of the German financial marketplace quickly in order to use the potential of a new financing instrument. The emphasis was also back at that time on synthetic securitization as a means to transfer credit risk and have an indirect access to financial markets for all those businesses that didn't want to access the market directly. It was also the time when even the end of the three-pillar structure was on the table. The German Council of Economic Experts explored the option of what was possible under the savings banks law, and the Bundesbank was also said to be in favor. So in this context, the crisis led to a veritable reappraisal of the merits and risks related to market-based banking and asset securitization. And there was, in a certain way, a renewed esteem for a traditional, original to hold bank lending along the three-pillar structure. And in 2015, the Bundesbank, for instance, concluded that the financial crisis had ended the period of expansion of the larger banks, which had focused on capital markets and investment banking, largely funded by the market rather than deposits. Earning drops, changing in financial markets, and the substitution of financial market-based resources by deposit, partially reversing those developments from the period prior to the crisis. And just in very brief term, a similar change of philosophy with respect to bank lending, as we have seen in France with the 2008 crisis and the not clear impact of Basel III at that time, occurred in Germany during the 1990s, when there was kind of banking crisis in the German financial system, when it was clear that, including many of the smaller savings and cooperative banks, had problems in risk management. There was a strong pressure put by the banks on the businesses to increase their equity levels and to professionalize accounting. So we had a similar movement in both countries. So, and to conclude, so what does all of this mean for today? The interesting thing for me is when looking at bank lending, I think both the French and the German financial system perform relatively well. Similarly, even despite the large differences which we have in terms of the setup of the banking sector, the difference that we find, or that I found, were much more related to the timing in terms of credit cycles and financial reform. So, and if you look, for instance, at the importance of corporate lending, it is roughly the same in terms of balance sheet totals. The interest rate development for corporate credit, it's not that different. Now, evidently, there are other aspects of both banking sectors where the differences are more pronounced when it comes to the importance of interest-based income versus other sources. Profitability obviously is an issue, and clearly where size matters, the French banks also have an advantage. I think another lasting impact of the crisis is certainly that the three-pillar structure is not, at least politically, questioned anymore. And if you look at the coalition treaty of the hopefully next government, you can read that Germany is for a true savings and investment union, and at the same time, the three-pillar model needs to be saved. So this is, one of the conditions. And another aspect that I find important is the articulation between the real economy and the financial sector. This holds probably for both countries, but maybe a bit more for Germany, where the financial sector is less perceived as an economic sector in its own right, but more as a backbone or a service provider for the rest of the economy. And so, like, having the showing and being clear of in what ways reforms in the financial sector can be useful for the whole economy as a whole is in my view, important. And I think it was a wise move, for instance, from Enrico Letta, to not to talk about the capital markets union anymore, but to use the wording of a savings and an investment union. And just one very brief last remark, like when looking back at the broader discussions in Germany following the crisis, the focus was very much away from any financial innovation, which, if you look, for instance, at asset securities, were basically a burned issue at the time. I think maybe, and that's probably what will also be discussed in the following sessions, is that maybe this very, very strong reorientation towards traditional banking will come to an end, or there will be more openness now in Germany than a couple of years ago, due to the confluence of several factors, be it the demographic change, the need for private old age provision, the willingness to become less dependent from the US, including in financial terms, the needs in terms of investments for the security and the green transition, and also in a very basic way, the questioning of the German economic model, which was very, very long underpinned by the close relationship between the banks and the big corporations, and this widespread recognition nowadays that we need additional forms of funding when it comes to seed capital, risk capital, and that financial markets also have their role to play. Yeah, so all of this is in the book that was mentioned, and I think I'm supposed to end here. Thank you for your for your attention.
Thank you very much. I think we've just in time. We have probably the possibility to have 2 or 3 questions on this broad topic with much intersections and interdependencies. Are there questions?
Or reactions?
Pardon pour une deuxième question. Ayant appris la langue française à l'Institut franco-allemand à Ludwigsburg comme enfant,
wow.
Permettez-moi une deuxième question. Yes, thank you very much. It was really interesting what we have heard now and seen, because I'm not so familiar with the French corporate sector. Everybody talks about banking and capital markets union. Could you please comment a little bit upon the different structures of the corporate sector, because banks are a service sector? I think, we have 3 million corporates in Germany. 98% of them have a yearly turnover of less than 50%. 99 or 95% of them in the legal form of a limited partnership. They cannot, they do not want, and they will never go to the capital markets directly. I think. Perhaps you know it better. But I have written so many speeches about this subject that I have some doubts. And what about the French sectors and the large number of SMEs in France? I think 99% of German corporates need banks, if they need them at all. Many of them are proud to accumulate profits. And sometimes they tell it you in conferences, we do not need banks. The German corporate sector is a net saver. In the macroeconomic statistics, you can see that German corporates are a net saver. So please tell us more about France. Thank you.
Yeah, I mean, it's true that if you look at the size structure of the corporate sector, there are much more German businesses that potentially could go public if they wanted to than in France. So in France, you have the very well-known, politically, during a long time, very strongly supported, very big businesses. But if you look at the corporate sector, there are relatively few OTE, so middle-sized enterprises, and a whole bunch of very small businesses or individual entrepreneurs. So from the corporate sector perspective, I would say that it would be much easier to have more direct access for businesses in Germany if they wanted to. It is a big change in terms of corporate governance than in France. So in France, in the context of the post-crisis reforms and this acute willingness to support the SME market segments, there were experiments with having joint issuance, for instance, so it's not an individual company but grouped that agrees on a setting, but certainly another part of the natural answer is having more securitization. So not thinking about direct access also from the perspective of the corporate sector, of what it implies for a business, but also rethinking asset securitization as an indirect means, which makes a lot of sense given the overall setting in my view.
Thanks.
Danke sehr. Ich wollte nochmal erinnern an, I wanted to come back to a remark that an earlier speech had made about the very different relationship between the government and banks in France and in Germany, because I think that played a major role in the very different approach chosen in the financial markets crisis. As I recollected, in France, there were very quickly rules out there to assist banks sort of by force. We didn't have the choice then to take money while in Germany we were thinking and thinking and thinking about regulation, and in the end something like a little worm came out. It didn't help, and the banks didn't take the money that was made available. And I think that is really the cause for the different financial results, that in France we have seen a positive effect, positive return on those I would call them forced bank loans, while in Germany, we still don't know where we stand.
Yeah, I think it's perfectly right what you're saying. Like, I mean, in France you have 5 big banking groups. So when you talk with the CEOs of those banks, there's the largest fraction of the banking industry is kind of covered. Like, I know we talk an important, smaller French bank, French&German bank, but in terms of considering the whole market, it makes a difference. And then certainly there is also there is a certain closeness in terms of political elite that shares the same way of education in a way. And I mean, I would say having this setup, including all to take money, certainly was, in retrospect, a good choice, a choice that paid off in terms of overall satisfaction. But it had the side effect that it was judged, and I think we cannot underestimate this. It really had the effect of saying they all got money. They all got money from the state, from taxpayers' money. And how can it be that I, as a businessman, am refused credit? Yeah? These are, of course, individual cases, but if they resonate in the media, they have an effect. And for a very long time, it was really unclear in France. It took really a lot of research and public communication, including by the banks themselves, to have this image of the banks are not lending anymore, getting rid of that. It really took a long time and a massive communication effort, including by the banks.
Thank you very much, Eileen, for this wonderful talk. And you gave us pretty much hints for the following panel discussion, which and I'd now like to hand over the microphone or the moderation to Detlef Fechner from the Börsenzeitung, who's going to introduce the panelists, and then we'll lead through the next section.